Hello, everybody. Arun Mehra here again at Samera. I hope everybody is well. We've got a very short but useful webinar being hosted by myself and Nigel Crossman. Nigel's our head of commercial finance, so he's the man you can go to raise finance for any of your particular business needs, small or large, freehold, leasehold setups. Hi, Nigel. How you doing?
Good morning, Aaron. I'm fine.
Good. So what are you going to be talking to us about today?
Today we're going to talk about literally the fees and costs associated with buying a practice, and this is about those sort of hidden fees that you have to allow for, and therefore when you're buying a practice you have to put enough money aside to cover these sorts of things.
Okay, all right. And I suppose it's important to understand these costs before you buy and what those costs are. So should we crack on?
Yep.
Oh. I better run through this quickly, though. This is just our normal webinar, just for information purposes. And after this webinar, if you need any help, we strongly recommend you seek professional help. So let's crack on. Go for it.
Okay, so when you're buying your practice, obviously the main cost is the actual purchase price of the practice. But what you've also got to allow for, and as I said here, what you should prepare for, are the solicitor's costs. And the solicitor will do things for you like due diligence on the target practice. He'll actually do the conveyance of the purchase, and in many cases he'll deal with the CQC and get you sorted out there. Now all these take time, and as we all know with most people, time equals cost, and therefore it's not cheap. But it's wise to get 2 or 3 quotes at the outset to see what the solicitor's costs will be. There may also be accountant's costs. You might have to seek for your own use quick preparation of your end of year accounts, and there may well be a charge for that. It may be necessary also to prepare projections for the target business to show the lenders what you intend to do with the business and how you intend to grow the business. So those 2 costs are things that are very important, and that's why in a way it's very important to ensure that when you're buying, for instance, if you're buying a dental practice, that you use people who are used to dealing with dentists and their business. So a specialist solicitor and a specialist accountant is very, very important.
Okay, great. Can I add something there, Nigel, as well? I've seen in the past where people have cut corners and that the due diligence hasn't been thorough enough, and therefore that's led to them buying a practice, and only lo and behold, once they bought the practice, there was a whole list of fictitious patients, work that was done. Similarly, the accounts were fictitious. So I must stress here, whilst it might cost a little bit of money to employ solicitors and accountants, it's important that you do, because the last thing you want to do is have to end up in court suing the previous vendor and costing you a hell of a lot more money than it would have done for some professional fees. Okay,
that's right. Yeah, and also if you employ someone who's not a specialist, often their original quote will be exceeded by the amount of work they have to do because they've unprepared for it.
Yeah.
So that can mount your costs up as well.
Okay.
Right. So what other costs are there? Well, there are lending costs. Now, most people don't think about these when they're borrowing money, other than the interest rate. But if you're buying a practice, the lender may well ask for a valuation of the practice to value the goodwill, or if there's a freehold property attached to it, to value the freehold. There are normally arrangement fees to pay, and these can vary between lenders, normally between about 1% and 2%. And also, if they're taking security, if they're taking a charge over the lease or they're taking a charge over a freehold property, there will be security fees to pay, both in registering the security at land registry and also the bank's own fees. And some lenders also charge what are called documentation fees. Normally these aren't very high, but they're all little fees that add up, and in the end it requires quite a large sum of money to cover them. So it's worth making sure what costs your lender is going to charge you for when you're actually looking at the deal. It's not just all about the interest rate.
Okay.
So when you've got the documents and you've got an agreement, and what should you look for in your documents? Well, unfortunately, most people just sign these documents and don't look at them. But there are things in there that could be in there, like early repayment charges. Now, this is a charge for repaying your debt earlier, or actually accelerating the payments, and that's something you may want to do in the future. Sometimes there can be exit fees. If the commitment period is only for a short period, sometimes lenders will charge a fee at the end of that period. You have to look at what can change the actual interest rate. Can it be varied, and what is it set against? Some rates are set against base rate, which most people understand, and some rates are set against LIBOR, which is the London interbank rate. Now that is a much more complicated rate because it's not so readily available, and there are also different variations of LIBOR, 1 month, 3 month, etc. The other thing to look at is the commitment term. Some lenders will, and if you're buying a practice, set your repayments over, say, a period of 15 years, but they'll only commit to that loan for a period of 5 years. Now, that's fine if you're buying a practice and you think you're going to repay it in 5 years, and perhaps you might want to sell it or move on. But if you don't, then you've got to look at that, because at the end of the 5-year period, you're going to have to renegotiate that loan, and there may be more fees to pay at that point, such as another arrangement fee. There may be changes to security, etc. And so you've got to look at those carefully.
And I think, can I add one other point there, Nigel? The risk in that scenario is you might have been paying your loan off over 5 years, but after 5 years, the lender might decide they don't want to reissue the loan again. Okay, it's not likely, but it could be possible. So therefore, you've got to go through the whole role with another lender for the cost of arrangement fees, solicitors' fees, security fees, which can rack up, as Nigel mentioned, very quickly. So it's important to understand the commitment terms of your loan. You don't have to be refinancing every 5 years, only if it's in your interests do you want to be doing that. But otherwise, if the lender's enforcing it with only a shorter term commitment, that's not a good sign.
No, that's quite correct.
Okay.
So I've entitled this slide, "How can we help you?" Well, we help you obviously by the knowledge of the market. I mean, myself, I worked for 38 years for major banks, and I ran a healthcare team for one of the major banks for some years. So it's about knowledge of the market, who is lending in the market and how are they lending. It's also being aware of these additional costs and who charges them, because not every bank or every lender does the same thing. They all have different policies and they all have different charges. So it's important to know where to place the deal to avoid some of those charges. And what we do here at Samera is we will go out once we've got all the information about the practice and about you, and we will ask 3 or 4 lenders to compete for the actual deal. Now, what that does, it quite literally does build a competitive environment. They know they're in competition with others. They will therefore give you the best rate they can. So our negotiation skills there are important. Now, some brokers will tell you they get preferential rates. There are no preferential rates for brokers as such. What you get is you get all my skill as a negotiator to actually bring that rate down. So it may be a different rate to what you would have been offered if you had applied direct. Accountancy charges, well, if you move accountants, and there are special deals available, Samera accountants actually do a package for new people, so you can actually bring accountancy charges down, and we streamline the process for you. And at the end of the day, the lender, and most people who have bought a practice will be well aware of this, they'll have lots of queries, lots of questions, and going backwards and forwards when you're trying to do your daily work is quite hard. So therefore, we're available all day to deal with those queries, and very often we've got the information in front of us, and very often we've actually given them the information. We just need to point out where it is for them. So that's how we can help sort of you get the practice that you want at the right price.
Okay, all right, and we've kind of mentioned that already. So seek professional help. But one thing to ask, Nigel, is. Are these costs available to be funded by the banks? Would they fund these costs, like accountancy costs, solicitors' costs, their charges as well, arrangement fees? Do they fund these?
Yeah, again, this is down to our specialist knowledge of all the different lenders. Some lenders will put the arrangement fees on the loan. They will add them to the loan, and obviously that's a huge advantage, because if you're borrowing a lot of money and being charged 1.5%, that can be quite a lump out of your cash flow. So if you can put it onto the loan and spread it over the period, then it makes life much easier for you. So there are things you can do there. The other thing is there are lenders out there for certain levels of lending will not charge fees for evaluation. They will not charge arrangement fees. And so it's using that knowledge that we have to place your deal and structure it in such a way. For instance, if some lenders don't charge arrangement fees over under 500,000. So if you're looking to borrow 505,000, we would use our experience to say to you, well, it'd be well worth your while here to actually borrow 500,000 and actually save a 1.5% fee. So it's about doing those what look like little things on the surface, but they add up to really big savings. And really, the negotiation on the interest rate is one of the most important, because if you're borrowing money over 15 years, 0.25% or 0.5% off your actual rate of interest can make a huge impact on how much you repay over the period. So what's important really is to think about what you want to do, think about how it's going to be structured, and seek professional advice, both from a broker, both from an accountant and a solicitor, to make sure you get the right team around you.
Brilliant. Thanks, Nigel. That's very helpful. And if anyone needs any help in raising finance, wants to know more, get in touch with Nigel. Thanks.
Yeah, happy to help.
Cheers. Thank you.
Bye.